All right, masters of stock market, welcome to another video. Professor Joe here, and I hope you all are doing great. In this video, we are going to cover about sectorial analysis. What is the importance of sectorial analysis for an investor before they invest their funds into a company, or even if they have invested their funds into some company to make sure that that sector is doing well or not. So let us do a deep dive and understand what are the things that you should look into in sectorial analysis. Now, sectorial analysis is an analysis tool for businesses and investors to understand complex dynamics of an industry, trying to make sense of what is happening in the sector, trying to understand the growth potential in the sector, trying to understand the competition in the sector, understand what is being offered in the market, how companies are trying to differentiate and provide a better service to their customers, improve their customer experience, how companies are attracting new customers to buy their products and services, ensuring sustainability in business by doing research and development to keep up with the market trends for the next 20 to 30 years. One way of doing sectorial analysis is a SWOT analysis. SWOT stands for strength, weakness, opportunity, and threats. In strengths, you have to look for the competitive advantage that a particular sector have. What are the strong points of that sector? In weaknesses, you have to look for the disadvantages in that sector, whether some new sector is going to come and take over, whether some new products from different sectors are going to come and take over. What are the opportunities in that sector? Is the sector growing? Is there some new emerging trends coming within the sector? You have to keep a track of those things. And in threats, you have to check whether the sector is going to close down because of some new emerging sector. Sectors close down because new emerging sectors always overcome and take over that sector. We have seen in multiple analysis there has been no sector that has been keeping up with pace for more than 2 decades. They're up for 1 decade, then they're down in the other decade. That is because there is sectorial cycle analysis also. We will look into that as we go ahead. Another type of analysis in sector is called as a PEST analysis. PEST is for political, economic, social demography, and technological. Political, whether the sector's regulations are relaxed, whether there's a lot of tax benefits, whether there are a lot of trade policy which benefits that sector, whether there are labor laws which is good for the sector. In economic, whether the country is developing, whether the GDP is growing, whether the inflation rate is under control, these things also play an important role when we talk about any sector within a country. Social demography, what kind of population this sector is catering to, the age demography, the gender, the trends, the fashion, the health, whether this sector is contributing to all these things. All these come under social demography. Whether the sector is popular in these demographies is very, very important. Technological tools, is the sector growing very, very fast because of the latest technology, AI, machine learning, big data? All these things play a very, very important role. Another important thing about sectorial analysis is at what stage is the sector in or the business within that sector is in. Whether it is in the birth stage, that means these companies in this sector are very, very new. Now, when we look at solar energy sector in India, this is in the birth stage. It is going to grow. The growth potential is immense. Looking at the political support and the government support, the solar energy system. The next is whether this sector or the business is in a growth stage. This is also a good stage to enter into the markets. The next is the maturity stage where this business has already reached maturity. Now, growth in this business and this sector will be there, but it will be very, very gradual. And the last stage is the decline stage, whether this sector, the products of this sector is now not in much demand. Now, until and unless some company come up with a wonderful research and development and do something visible for the next coming generations to keep up with the customer expectation, then that sector will do well. So these are different ways of analyzing a sector. Now, within a sector, there is a market cycle and economic cycle. This is very, very important for an investor to understand that every single sector will never be on the top. When the economic cycle is in the bottom, there will be some type of companies which will do well. When the economic cycle is in the growth stage, different kind of companies and different kind of sectors will do well. And when the economic cycle is really at a peak, a different kind of sector and a different kind of company will do well. And the cycle keep continuing. Never will it happen that an economic cycle will stay at one particular stage. It keeps going up and down. This is something that every single investor must understand. During recession, there are some sectors that normally do good, or we call it the recession proof industry, like healthcare industry, education, FMCG, utility, financial advisory, medical counseling. These are some of the industry. Even when things are bad, people will never give up on this industry. If you are ill, you will go to the hospital. If you wake up in the morning, you will brush. However bad the economy is, you will send your children for studies. So these are some of the sectors we call as recession proof industry. When the economy is just coming out of a recession, there are some sectors that will do very well, like banking. Because when the economy is coming out of a recession, the small companies and big companies now want to increase their production. So they go to banks and they will ask for loans. So the banking industry starts growing. Once the jobs start growing, automatically people will start spending. And when people start spending, they also go for personal loans and use of credit cards. When things start getting better, people want to secure their lives. So insurance companies also start doing very, very well. Because towards the end of a recession within an economy, you will always see that the interest rates are always very low. The latest example is COVID. When COVID happened, we saw that the home loan interest rates slashed down till 7%. In fact, some banks were giving it out at 6.5%, because this is the government's instruction. If people do not spend money, all the sectors will collapse. So all the interest rates are brought down when the economy is in a recession, so that all these sectors can survive. That's the reason banking, insurance, these sectors do well when an economy is ready to come out of a recession. During inflation, there are some other sectors that normally do good, like oil sector, gold sector, white goods, TV, fridge, washing machines. All these sectors start growing. Utilities, healthcare, real estate, vehicles, people have money in their pockets. They go and they start buying all these things. So all these sectors start doing well when the economy is moving ahead with full of inflation. There are other reasons for the sectors to develop also. Like when the government supports the sector. Government always keep encouraging production and consumption of goods and services of some sectors like tourism, hospitals, logistics, infrastructure, environmental, and finally services. Government always makes sure that they keep promoting these sectors because a lot of employment is created because of these sectors. Even financial sectors and exports, government always makes sure that they keep promoting these sectors. There are some sectors where government always give a lot of subsidy, like agriculture sector, energy sector, telecom sector, transportation, infrastructure, defense, technology. You can always invest in these sectors, especially when the government is promoting these sectors. You can go to this website, ideas.msme.gov.in. In this, all the new announcement related to investments from government into the sector is always given. This will give you an idea which sector the government is planning to invest next. Why do government give these subsidies? Government give these subsidies because it creates employment. It creates growth in the sector. It creates development in the sector. It creates development in geographical areas. The political hold of the politician increases, creating demand and supply in their areas, increasing the GDP of the country. And finally, the government and the politicians do these things to keep up with their political commitments which they had done to the people at the time of elections. One should also keep track of the government announcement of different sectors. Like whenever there are FDI investment in a sector, that sector grows. Whenever there is a repo rate reduction, that means the RBI announces that they are going to give loan to banks at a lower interest rate, then the banks also go out and start giving out money. So, which sector the banks are supporting, that sector will also grow. SEBI's announcement on some particular sectors, that also makes a lot of difference. The finance ministry announcement on sectors, this also makes a lot of difference. So friends, I hope that all these points that we have discussed in this video will help you to understand a sector in a better way. There is no single formula to understand all the sectors. You have to read about it, you have to analyze about it, you have to discuss about it. You need to have a group of like-minded people like our community so that you can understand what is happening in the sectors, and then you can invest, or if you are already invested, you can think whether you want to continue that investment. So I hope that these things are clear from this video. Like Warren Buffett always say, the more you learn, the more you're going to earn. And I always say, keep learning, keep growing, keep getting better every single day. That's all in this video. Thank you. Namaskar.